With the onset of the pandemic, a lot of lenders who previously provided home equity loans stopped lending. The biggest reason for this was that they just chose to focus their limited people resources on the mortgage side of the business. If you already have a great rate on your mortgage or just looking to get access to cash on a faster time horizon, you're probably looking for a home equity loan. In this video, we will cover home equity loans at a lender that we think is one of the best out there for home equity, Pentagon Federal Credit Union, or PenFed for short. We are going to give you a full rundown of PenFed's home equity products, from types of property that are eligible, loan amounts, rates, and the amount of home equity that you need in the property. We are also going to cover our experience in 2020 getting a home equity line of credit and what you can expect in terms of time frame. But first up, a little bit about PenFed if you do not already know about them. Established in 1935, PenFed today is one of the country's largest credit unions, serving 2 million members worldwide with $25 billion in assets. They serve members in all 50 states and the District of Columbia, as well as Guam, Puerto Rico, and Okinawa. Who can join? Well, all branches of the military, but they're not just a military institution. You do not require a military affiliation, although that is what they traditionally required, or federal government affiliation. They have now opened it up to everyone in the U.S. that is a U.S. citizen or permanent residence. So simply click the none of the above in the eligibility section of the membership application. Now let's turn to their home equity products. PenFed does not offer a separate home equity loan, but they do allow you to convert amounts drawn on your home equity line to a fixed rate loan. So in talking about their home equity line of credit, home equity loans, there's kind of the first two categories, which is the same with all lenders, of whether it's owner-occupied or non-owner-occupied. We're going to talk first about the owner-occupied properties and then briefly talk about non-owner-occupied. So the rates that PenFed offers on home equity lines range from 3.75 to 4.75, all depending on how much equity you have in your property. So there's just a couple of breaks here. So if you are at 70% or less combined loan to value, you're looking at a 3.75% rate. Now what that means is the total amount on your first mortgage plus the additional amount that you're going to be taking out with the maximum value of your home equity line of credit needs to be less than 70% or less of that combined value, which is going to be based on a current appraisal. Okay? So you got to have a sense of what your home's worth and whether you've been paying on your mortgage enough that you're down and you have a certain amount of equity, plus how much you're actually looking to take out. So those are all the factors that you're going to look at. As you go up, right now, they also actually have it up to 80% is going to have that same 3.75 rate. Once you go over 80% and you're at 80 to 85%, you're up to 4.25%, and then at 85 to 90% combined loan to value, you're at 4.75%. So that's kind of the rough breakdown of what they're offering in terms of rates, which are really still very fantastic. Obviously, if you have the ability to refinance your mortgage and take out equity there, you're probably going to be have a little lower total rate. But if you've got a really great mortgage rate and you don't want to do that with the additional mortgage refinancing costs, like I said, PenFed offers some really great rates, in our opinion, for what they've got. The other thing that's really key here is they do have pretty high maximum loan amounts. So they start at a minimum of $25,000 on everything up to 85% combined loan to value. You can take up to $500,000 if you have that available equity. Once you go into that little higher rate, once you get into the 85% to 90%, the max loan is $250,000. Okay, so taking a look at just some of the other information you'll need to know about their home equity lines. We've already covered what their loan amounts are. They have a 10-year draw period and a 20-year repayment period on these home equity lines of credit. This is really standard. during that 10-year draw period, you're only making interest-only payments. You're not having to pay principal until you get to the end of that 10 years. Starting in year 11, you're going to have to both make principal and interest like you would on your mortgage loan, but your cost up front while you're still drawing on your line of credit from the time of inception is just going to be interest. So it's a great way to take advantage and have a lower payment. Now, even though they don't offer a separate home equity product, they do give you the option to switch to a fixed rate on all or some of your line of credit at any time. So essentially you can lock in, make this like a home equity loan. You have the flexibility, in that first 10 years to figure out how much you're taking on the line of credit and whether you want to fix your rate. Like many lenders, PenFed pays most of the closing cost unless you close your line of credit within the first 3 years. Then you're going to have to pay those closing costs. So as long as you keep that line of credit open for at least 3 years, they're gonna take care of the closing costs. They have a $99 annual fee, but that's waived as long as you've paid at least $99 in interest during the preceding 12-month period. As long as you're using that line of credit in some way, you're probably going to hit that letter. So it's really just they don't want folks that are not going to use the line of credit at all, and that's why they charge the fee there. So what can you expect in terms of time frame from applying to closing on your loan? We're going to quickly kind of walk through our experience with PenFed so you can get an idea of what that's like. As we talk about this timeline, it's in actual calendar days and not business days. And when there was an actual task for us, we turned it around within a couple of days. So pretty representative of kind of how quickly you can potentially move through the timeline with PenFed. So first, day one, submit the application on the website, simple. Day 6, got a call from the processor and received the initial document request. These were things like the last pay stub, most recent pay stub, most recent mortgage statement on all owned properties, a copy of your most recent tax and insurance bill on all owned properties. If your payment is not already escrowed, if those are not already part of your mortgage payment, those are when you're going to need those separate statements. Copy of your homeowners association statement if you have a homeowners association, and a copy of driver's license. About a week later, day 14, spoke to the processor regarding a need for an external appraisal. So PenFed uses this automated valuation system. If they can pull the value for the property, they'll just use that. If they actually need to go do an external appraisal, there's going to be an appraisal cost, but they cover that just a little bit more in terms of time frame. So a couple weeks later, got a request for some follow-up income documentation. Whether you're going to have something like this really depends on the type of income you have. If you have just regular, steady pay stub income where your income does not vary at all from week to week or bi-weekly, you probably won't get a request like this. If you are self-employed, if you have variable income and different times when different income comes in, you're probably going to get something like this. And if you've done mortgage application before, you're going to be used to these kind of situations. So got that documentation request, was able to provide it pretty quickly. And then a couple of days later, got some follow-up questions regarding that income. And then on day 48, another couple of weeks later, kind of finally got the approval from underwriting. Now that's kind of like, I think, a typical time frame, like a little bit longer on the longer end because we had more income complications. We also had some complications because we needed that external appraisal, which actually was not just an exterior appraisal, it was also an interior appraisal, and the appraisers were just super busy in our area, and it took a while to get the appraiser scheduled. But once that appraisal came in, the closing documents were available in 5 days with the actual closing just a few days later. So I think for a normal application, I think a 45 to 60 day time frame is more realistic. Ours was a little longer, but again, it was just because of the particular issues of this property and the availability of appraisers in our area. Hey, thanks so much for watching our video. We really appreciate your support. If you're interested in continuing to support the channel, we would love it if you hit the subscribe button, and have a great day. Thanks so much.